Alright, what's going on, people? It's your boy Haken TV, and in this video I'm going to be showing you how I was able to make $4,000 trading markets today. Of course, a lot of people is like, oh boy, it's just paper trading. I took this trade also in my real account, but this is for, educational purposes, just to show you lot that I actually enter these trades. I don't just come out here and chat nonsense to you lot. Anyways, let's jump into this, and yeah. So this morning, this is a new week opening gap all the way back, a few weeks back, and this price around 9:30, price shot all the way back up here. The new week opening gap high, and of course we had a high from yesterday, and the high the day that was Wednesday and Thursday's high. That liquidity was swept. Now, at this point in time, I was like, well, if I was going to enter, I buy. This was the place where I was going to enter, I buy. But I don't trade until after 10 a.m. So 10 a.m. came, there was a news, and this started happening. This massive drop right here. Now, a lot of people is like, oh, you're chasing price. No, I'm not chasing price. I know exactly where price is going, and that's the reason why I took that trade. And price was going to go to the next new week opening gap here. Again, I stick to my risk one, get two. So I risk $1,000 to get two. So I'm gonna show you where I placed my stop loss. I had entered right here. My stop was literally right above this point, right in the middle, and then take profit was literally like right here. And you can see this candle was what tricked me into taking my profit. So this was a 5 minutes fair value gap, and when price traded through it, it became an inverted fair value gap. Now, the moment price trade through this, I actually entered at this candle, not the fair value gap here, where you should wait for the fair value gap. But either way, it's a good place for me to enter. I really don't care. Whichever one is fine. I entered right at the tip of this candle right here. As soon as I entered at the tip of this candle, the next thing is I kept trailing my trade. And I'm just going to post one of those videos, like just a vignette showing you exactly how this trade panned out. But this is me explaining how I took the trade. And then price just kept meandering up and down, but I was seeing nice moves. You see this energetic move, took out this low. That's what I want to see. And now look at what price was doing. Literally before my take profit, price came, ticked onto this, and then I got my take profit hit. But yeah, so that's one of the trades. Now let's go to the second one. Again, it's inverted fair value gap, price trade through, enter at this fair value gap, and then go to my take profit. It's simple, it's easy if you understand exactly what you're doing. Again, another thing that supported my idea was price was already trading below this fair value gap, which means I'm looking at price to trade lower. I'm seeking lower prices because there was liquidity was also down here. You see all this liquidity down here? Yeah, that's something else you have to target. And then this fair value gap right here, it was from yesterday. Price traded below that. So there were so many things that was going to magnet or drag price towards itself. So like there's attraction, there's price was being attracted to a certain direction, and I just traded. People will say this is chasing. I'll say this is perfection, this is skill, this is excellence. That's what I'll call this. This is not chasing. And to show you that this is not a fluke, because a lot of times people think, oh, it's just a fluke, you can't do this. I say, watch all my videos in the past. You can see I do this like almost every day. Like this week has been like a lot of news, so I didn't really get into the market a lot. Even yesterday, where I posted about the trade I took, I got my 1-2, but I was being a bit greedy, which I usually am not. Now, just to show you, like I said, that this is not something where it's just luck or anything as such. It's skill, it's excellence. Look at this. This is liquidity, sell side liquidity down here. Price, this is also from like today, earlier on in the afternoon. Price came down, took our sell side liquidity, literally resting right on the new week opening gap. You can see my notation here. I have got new week opening gap high, consequent encroachment, and low. So now you see this fair value gap here, very important. And there's another one here, very important. So when price is going to go down, I would like to see this as a breakaway gap. But what happened is price tipped into that, came all the way back down, and also there was also in Nasdaq and Dow. There was also SMT, so those were making lower highs, and this came and made equal lows. Now some people was like, oh, price is definitely going to come and take this equal lows out. Like I said, it's skill, it's excellence. I've been studying ICT for over a year, and I failed with this. I thought smart money was absolutely trash, ICT concept was trash, but now it's literally a year and few months, and now I'm beginning to get it, understand exactly what how to read price and position myself into the right place where the market is actually going, and not the opposite of where the market is going. So now, what did I use to frame the trade? First of all, look at here, clean highs. That was a very nice swing high, and you see this daily order block here. This daily order block has been what we've been trading off of for the past God knows when. So this swing high here, price is going to draw to that. Secondly, this new week opening gap, if price is above it, I want price to keep trading higher. If price is below it, I want price to keep trading lower. But look at this, price struggled. It literally got here and it's like, nope. And then you see this energetic move, and this is your 2022 model. Swing high taken, fair value gap, right? Do you remember that now? And then you enter here and you target here, your stop is going to be right here. Well, I used something different to enter, okay? I waited, this fair value gap, price traded above, that's a balanced price range, which make this an inverted fair value gap, okay? Now, this is supposed to be my entry, literally when price traded back to this point. But the reason why I didn't enter there, like I said, I entered at this week here, literally at this week. Let me show you. This week, stop was literally right here, and then my take profit again, 1 2 2 2, where is it? 2 right there. That was my take profit. That was my trade I took today. Now, entered into here and I started watching price. Like, again, you don't just enter into trade and you just walk away. Just sometimes, like even earlier on here, this, I had to go see a doctor. So when I drove, it was like 10 minutes away. So literally when I got to the doctor's office, it was literally already here. And then I started, annotating all the stuff. And then I went in, I was filling a form out, and the next night I saw the trade already went through, and my actual account, it got hit take profit also. So price traded above, and now I was expecting price to destroy this. The reason why I was expecting to destroy this was, again, price traded to the consequent encroachment, and it didn't start rejecting. So stop loss here, and again, you see, of course, this was where I was expecting price to go. And if you can see right here, I'm going to show you something. See this fair value gap from yesterday, literally to the tick of that fair value gap, price came all the way. I'm satisfied. I don't need to. If not, I would have gone in and taken a short here, take it all the way down, and then maybe somewhere around here, I may have gotten into a buy. Maybe somewhere around here, gotten into a buy, maybe here, going into a buy and taking it all the way up. But you have to be satisfied. You can't keep going into the market and keep, taking a bunch. No, I think 2 is enough. $4,000. Honestly, if you get the $150,000 and you're just, that's not even up to 1% I'm risking, and $4,000 in one day, just imagine you're able to do just this 4 times in a week, in a month. Come on, that's a lot of money. That's like $8,000, $16,000 in a month. Let's even say this is just what you can do in an entire month. That's you making your entire monthly salary in one day. So that's enough for me. Just take 2 and it's good. So this is just to show you lot. This is not me chatting nonsense and all that stuff. It's just sometimes you show this just to let people know also that, hey, this stuff works. And also this is to encourage you. If you are learning ICT stuff, you're doing the 2023 mentorship, you're going, try as much as possible to watch those videos at least 2 to 3 times. A lot of the live stream, what I also do is after the live stream is over, I have my notes while, the live stream is going on. Then later on in the evening, I'll go back, like after the market closed, like maybe around 8ish or 9 p.m. I'll go back, increase the speed a little bit, maybe 1.25 and stuff. and then I'll go back and, annotate my charts again while studying and taking notes upon the notes I already have, because then you can understand. In the following day, I start looking for the things that ICT has already mentioned on top of what I already know. And then this, you can notice I didn't use anything like a swing high was broken, a swing low was broken, and I see SMT and all that stuff. That is what I usually do. But you can see it's not even here, and still I'm able to make profits from the market. Well, that's it from me. Thank you so much for watching. If you're new, hit the subscribe button, of course, and leave the video with a like. If you've got questions about ICT or anything, leave them in the comments down below, and I'll talk to you guys in the next one.